The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we're coming back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. And don't forget, you can listen to us anywhere on your mobile phone at TFNN.mobi. Well, we got FOMC coming out today, so I hope you're ready for it. Let's check out where the markets are at right now, and then we'll start talking about some ways to trade it. All right, we got the S&P is down 2.5 points. We have the Nasdaq down 24. Russell is down 1.5. Dow is down 17 points. Gold's currently, Dow's up 17 points. We got gold currently up $6 on the day. We got silver's already up 1%. Copper is unchanged, flat, nothing happening right there. We got oil currently up about 50 cents on the day. Natural gas flat. And looking over at corn, just down $1. Soybeans down 15. Currencies, euro dollar down 11 pips. Pound dollar, big mover, up 119 already. We got the Aussie dollar down 23. The euro yen's up 71. US yen's up 47. And the pound yen, not to be outdone, is up $2. That's right, $2.13 right there, 2.13, up over 1% already. Dollar CAD is up 42 pips. Dollar franc is up 26. And so just listening to that song right there right before the show by Tracy Bird there, nice song. One of the key lines in it, dollar used to go far, now it just goes fast. So that's very applicable because a dollar is going to be moving very fast very soon. All right, let's walk you through some steps and look at some trading opportunities. First thing, if you don't have a Nadex account and you want to try any of this out, this would takes you about 20 seconds. Okay? So right here on TFNN.com, click the Nadex banner on the right side of the page. As soon as you click on that, go to Trading Demo Trading Account and fill in your username, first name, last name, phone number, email, click Apply for Demo. Okay? So fill that information in right there. In about 10 seconds, you're going to get an email with your password, and you'll be able to log in right here up at the top. Now, if you want to check out the scanner, just hop on over to TFNN. Get free access to that right now. Check it out. Diagnostic box spread, also binary analyzer. So, and more cool things coming on that soon. We actually had the stop plugin done, and we are just doing some final testing to allow for actual stop orders on Nadex, which until now has been impossible and required you to sit there every single millisecond and hit the button when it was time. So, pretty excited about releasing that coming out soon. So, once you do that, then you're going to want to log in, like I said, over onto your Nadex account. And so let me get logged in, and we'll log into demo. We'll just start throwing some stuff on it. I want to walk through a variety of ways to trade this, and there's a lot of ways that you can trade the FOMC, and one of them is pre-FOMC. So we're going to go in and see, if those opportunities exist right now, and if they do, then of course we'll try to take advantage of them. Now, let me pull a couple things up. One thing that you're going to notice right here, you see me logged into the platform, is on the left side, you're going to see indices, forex, commodities, and events. I don't really trade the event binaries. I've dabbled with them a couple times. Their liquidity's low, and it's really more of an over-under type play. To me, it's not a movement play. It's just, I want to trade the markets. So I basically avoid those, personally. I may end up coming up with some cool strategy on them eventually, but so far it's like, focus where the liquidity is. And anyway, so now that we got that down, we're going to be looking at, for this strategy that we're going to talk about right now, okay, we are going to look at the binaries. And with that, that means we're going to focus on what's called a butterfly play going into the news. So with the butterfly play going into the news, what you're going to do is you're going to try to find a strike above and below the market and say, hey, is it going to stay in between this range? Why in the world would we do a range-bound trading strategy on the FOMC? Well, going into it, okay, we don't expect just a whole lot of volatility. Now, it doesn't mean we're not going to get it. That's why we're going to look at the charts. We're not just going to randomly throw it on and see what happens. But we are going to, check it out and see if we can, figure out a good way just to pull this together. So right over here, you'll see the scanner. And so we'll go into binary scanner. Okay. And what I'm doing is, again, I'm going to check this out on the demo side. I got my live over up on another browser with some, just a lot of stuff I'm doing. I got so many positions on right now. But lots of, like 70 different contracts going. But just to keep it clean for you, we'll throw up the demo here. And we're going to look at some FX pairs. So we can select all of them by clicking currencies right here at the top. And then I'm going to get rid of our, more exotic, euro yen, pound yen, euro pound currencies. And then the next thing I need to do is I'm going to need to go in and go, okay, what are my stats? What am I expecting to happen? And so before I pull all those stats up, let's go through the settings for a butterfly. So, choose your account, demo live, choose your quantity. You can do whatever, quantity you want. Go in on the risk margin. And by the way, the reason for quantity is so when you do a Nadex ticket, it will automatically fill that in for the ticket for you. It basically it saves you a step. Okay? So default this thing to 1 unless you want to do more than 1. Okay? This should be your consistent quantity that you do. Now, you can change that quantity when you open the ticket up, but don't put it on 10 and then all of a sudden submit it and not know you didn't do it, and all of a sudden now you've done 10 or 100 contracts and you didn't mean to. That's not a good thing. All right, so we got demo. You can hit, again, reset filters is a good way to start out. Type in 65.95 and choose, in the money, just so there's not any weird pricing things going on. And then we're going to go over here, and we're going to basically, we don't really care about weeklies. We're just going to look at dailies and intradays at the moment. And really, probably actually just intradays. Why do I say just intradays? Simply because we're wanting ones that expire at 2 for our butterflies. Why? Because the FOMC comes out at 2. And if I want to do a range-bound trade, meaning I think there's not going to be a lot of movement, that means I don't think there'll be a lot of movement before the announcement. I expect a lot of movement after the announcement. Okay, so by doing intradays, it's automatically only going to give me the ones that expire. We got 2 and 3 o'clock. So I may want to get rid of even the 3 o'clocks. And I could narrow this down. Now, there's a couple ways I could do this. I could just leave the interval to all. And I could bring it down and say, hey, here within the next hour, I'll get the same result. See, show me ones that expire in 45 minutes and 26 seconds. Okay? So let me do that one more time for you. Demo, reset your filters. Probably set your quantity to 1, especially if you're new or just whatever. But whatever you want to do there. And then risk, put 65 to 95. This is going to let me see basically binaries that I'm looking for in my price range. And I usually get not doing the $65 ones, and I'm probably not doing the $95 ones. The reason I set it $65.95 is, ideally I'm looking more for, around maybe like $15 or $20 in profit potential on each side. The reason I'm setting it at $65.95 is due to the fact that I don't want it to, let's say if I set it at, let's just say 75, okay? Then all of a sudden, if it goes to 74, I don't see it. So this lets me sort of see what's possible, what's out there, but, I'll just make sure that's the one I want. Also, what it does, if I don't choose it, watch what happens. Okay, even if I brought this down to an hour, then I'm going to get just a lot of contracts that are just not going to qualify. So, by setting this number, again, just a $65.95 and in the money, and then how many ever, hours you want till expiration. So, in this case, we want it to expire by 2 o'clock, okay? And one of the tips I talked about on the last time we did the show was you probably want to make sure you're out before, maybe like 5 minutes before 2. Simply because sometimes in those last few minutes, all of a sudden some orders can just start firing off. People can start taking positions, news leaks, whatever. And so it's a good way to help you, just avoid a lot of that mess. Okay? So now that we got that, next step, we want to, just pull up some charts and some stats. So for charts, let me, I'll open this up right here. We'll set all these up. We'll just go on over to, 5-minute charts across the board. And I can, maximize it if I want to. And obviously all I need are the charts. I don't need anything else on this for this purpose. And I can also, set any kind of options I want on here. So, whatever you want to do. Anyways, but we're going to go in, and so we'll choose, Euro, USD. Then I'm going to go on over, and I'm going to say, we'll just say pound USD. And then we'll go over, and we'll say, I don't know, we got dollar franc. And we have dollar CAD. And we have dollar yen. And we have, let's see what, Aussie dollar. Okay, and then again, of course, I can just go through and just check those real quick. I find it easier to work on the larger screen sometimes when I'm setting everything up. And then I'll just click that little button right there. It goes right back. Now, this is Thinkorswim. Of course, I also have Ninja up. So I'll flip back and forth between the platforms whenever I'm on the air just to show you so that way you can learn it. It doesn't really matter which one you use, whichever one is best for you. There's advantages to both. But for this, it literally has no impact. All right, so we got these up. And one other thing that I might do just to make all the charts the same. Okay, so this is just, again, going in, is I may get rid of the setting where I have price axis or time axis there. Make sure that's set to 0 on everything. It doesn't really matter which one you do. A lot of times people like to have that extra section there on the time axis, just so they can sort of plot lines and trend lines into the future, whatever. Really not looking for a trend right now. I'm looking for flat. That's my goal, is flat. Okay, so I'm just going to get rid of all those at the second. So all my charts will basically look the same as far as where the bars are at, the latest bar on the chart. And all the confusion you can eliminate, the less thinking you have to do, so you can just act based on the best possible setups, the better. So no reason to differentiate time zones and all that. That's another thing, is I'll try to set all my time zones to match up. So when I'm trading Nadex, and that's probably one of the biggest tips I can give you, is definitely make your time zones on your charts, on your platform. Make them match. If you're trading Nadex, make them match the Nadex platform. Really, if you're trading anything, I personally prefer to have everything just set to Eastern time. It's sort of how the world operates. It's how a lot of the news reports come out in Eastern time. And to me, it just makes it a lot of, again, it's one less step that I have to think about whenever I'm doing a trade if I just set everything on the same time zone. Now, I don't live in Eastern time. I live in Central, but it makes it easier. Okay, so we got our chart set up. We come back, we're going to talk about stats, see if we can find some trades for the butterflies, and then we're going to go into how to go into the FOMC news as well. So this is before, so we'll cover the before right after this break. Stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So we have to work off a couple screens here as we're going through this. So what I'm going to do is I'm just going to scroll down and we're going to talk about the stats, and then we're going to look at the charts. And so I'm going to operate off 3 screens, but I'll try to keep it as simple as I can, just because obviously I can't shrink things down. It makes it too hard to read here. We want to look at the, what are the just expected stats going in here to the last hour before the Fed funds is coming up. And so with that, 60 minutes before the Fed funds comes out, we can go down. We can look at each currency pair, and we can see if there's ones that are within our range that are acceptable, and are they even staying in it. And we've had, a couple shows where nothing was there. We've had a couple shows where we hit every single market. So it sort of just depends upon how they have it priced in as to whether or not it's worth doing it. So if we go over here and we look at the Fed funds rate for the Aussie dollar, what we're looking at is a range 60 minutes before of about 20 pips and 30 minutes before of about 13 pips. Okay, high to low. So part of what I'm going to do is, let's say if I was just looking at the Aussie on this, so I just want to go, what range am I, looking at just maybe on a basic support resistance level, okay? So we can see basically since noon, and so we've basically had a range right here, and really about 90 minutes before a lot of times is the best time to get into these because you have the most premium. But just to see this, we have a range of 88.88 down to about 88.76. So we're actually staying within that 14 pip range pretty well. Right now, the strikes that are available over on the Nadex platform are going to give me 88.86 to 88.76. So I may, or of course, may not like that. But again, so just to go into that, the strikes available for binary butterfly right now on the parameters we put in, 88.86 to 88.76. So that's going to put me, right here. I'll put this line further out, like 88, 86. If I took that trade to 88.76, really only give me about, 10, basically a 10 strike width. So it's going to be a pretty narrow butterfly. The one thing I can tell you that I do like about the butterfly, if I were to do this butterfly, is that I'm going to get about a $40 payoff on the trade. So the nice thing about that is, my risk reward isn't too bad. And let me show you where that $40 payoff comes from, okay? If I can make $30 on this side and $12 on this side, I'm looking right there at about a $42 profit. And I can just look right here at the max profit. You can see that on that section right there. Zoom in for you a little bit. So max profit 13, max profit 28. So if the Aussie dollar, between now and 2, and if it was this high of a payout and this narrow of a range, I'd probably just leave it. If it stays within this range, meaning I wouldn't exit if it hit the strike, stays within this range, I'm going to bring in about $40 on the trade. Okay? Now, if it goes up and my short side loses, I'll lose 75. I'll make 15, right? Because think about this. It's pretty simple, but it can't expire. The Aussie dollar at 2 p.m. cannot be both above 88.86 and below 88.76 at the same time. It can be in between them. It could be above them. It could be below them. But it can't be both above and below them. So one side, if you just leave it till expiration, one side will be profitable. Now, you need both to be profitable to have a net profit. But one side will be profitable. Okay? So if it goes down, let's say I buy this at 85, let's say I got out when it hit the strike, or let's just say I held on to it, okay? I lost $85, but I made 25. Well, then I lose $60. If it flies up and I lose 75, but I make 15, then I lose $60. But if it stays in between, I make 40. So that's not too bad of a payoff for a neutral strategy that takes about 40 minutes. Not the ideal strike width, but it is, one thing. So I'm gonna throw it on there. Again, I'm in demo right now. I'm just gonna walk through. I want you to see all this in action, see how it plays out, and we'll hit place order right there. Okay, so we got that one in, and then I'm going to go on the other side. Looks like we're right around 85.50 right now, and go ahead and hit that place order. So we got the other one on right now. Okay, so that piece is done. Now let's go down. Let's just check out each one of the pairs. There is one other step. You could decide to get out of the trade should it hit your strike. Okay, completely get out of the trade. And that greatly increases your, improves your risk-reward ratio. So, in other words, if I get out at 50, I lose 30, but I make about 25, I only lose like $5. So, not too bad of a scenario there either. That actually gives you a great risk-reward. But again, stay right there. We'll be right back after this break. We'll keep walking through this step-by-step for you, okay?
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so come back here to the Diagnostic Trading Hour. Okay, so just to, if you want to follow along, get in on this. But I can't tell you what my favorite butterfly is because I know the whole thing's gonna go fast. It's the pound dollar one right now. Okay, the pound dollar's had so much volatility today that it's just really wide, and so we're able to go in there and get a $30 butterfly, but it's 20 pips wide. Which, by the way, the average range, high to low, 30 to 4, which we're right at that, is 20 pips on the pound dollar. So at least we're getting a decent one. And we look at the chart, okay, on the pound dollar. Let's check this out. Look at the chart, then it puts us sort of in that range that it's been oscillating in since 12. So it puts the low below the low and the high above the high since 12 o'clock. Doesn't mean it's going to be profitable. What it does mean is that it gives you the best probability because the range is wider. The range is within the stats. All of the other FX pairs that we're looking at, okay, we're pushing. And that's why I said do this in demo. But we're pushing because they're 10 ticks wide, right? I mean, you're going in here and not getting, or they're no payout. I mean, there's a euro dollar, but you're only getting $6. It's not even worth doing after fees. So nothing on euro dollar. I mean, even on the Aussie dollar, we got this right here. You got a 96.76 that you could be looking at, but that one's, if you try to do the other one we were looking at, the 86.76, obviously you're pushing it at this point. So that 10 ticks, we're really pushing those stats, and you want to play within the stats whenever possible, because that's going to give you your greatest probability of success on the trade. So, and again, of course, you can always hop out when you get those stats and you make sure they're all lined up correctly like that. Then if you do have to bail on the trade, it doesn't hurt as bad. So, because you're able to max out that profit on one side when you exit the other side to help hedge part of that risk. But anyway, so my pick of the day, okay, And we'll see how that one plays out. My favorite pick, if you're hopping in right here at this 30-minute section, there were some good ones over at 90 minutes, but we're past that. But for the 30 minutes, the ones that we can do right here during the show is going to be, the pound dollar is the one that I favor. Okay? And again, that's because our average range high to low is 20 pips, and we're right in the center of that. So that lets it, fluctuate, and that puts us outside sort of the, short-term there support resistance we've had for the last 2 hours leading up to this FOMC announcement that's coming up. Okay. Let's see what else we can do as well. So let me pull up a couple other things and show you some other little tips and tricks along the way. But I wanted to give you at least one solid, good-looking butterfly on there. We threw 3 Aussie. We've got the pound. Those may work out. They may not work out. But there's a let's see. I could look at a couple other ones. I mean, the euro dollar, there was a 37.66 by 37.56. Actually, I just got filled on that, so that worked. I layered into it. And when I layered, this is where you go in on one side of the trade and you put your price in, then you go on the other side of the trade and you put your price in. So, meaning, let's say like one side you can get filled at the price you want to get. Like, say I want to sell at, 15, but the other side is a buy at 6. Well, I may go in and decide to go, you know what, I'll do that if I can get it wider, if I can get it, up at this price level. Like, let's say this one's at 91.50. You may go ahead and take this one at 12, but you say, you know what, I want this at least 88. So you take that trade, you put that trade, you let that order work in, and as the price is fluctuating, ideally you get filled on both sides, but it allows you to get that 20 pip wide strike. And sometimes that's the only way you can do it. You have to tier in. Sometimes you don't literally have any other choice but to tier in on the trades. Now, as far as take profit, if you get a decent amount of money, now if you're getting like $10, $15, there's really not enough money to do this. But if you do get like, say, 25, 30, if you can get out, if you buy it, let's say 75, and you can get out at 95, get out. If you sell at 25 and you can buy back at 5, get out. Okay, so don't hold the trade. Don't allow a winning trade to become a losing trade. Now, if you can't, or let's say you do get a good 1-to-1, close to 1-to-1 risk-reward ratio, you may decide just to hold the thing into the 2 o'clock hour, and even if it does hit your strike, you could hold on to it. The third option is if it hits your strike on either side, you bell. Obviously, that will lower your risk, but it will also lower your probability of profiting because, it may expire back in the money. So sort of an Aussie dollar one has that example going on right now, where the Aussies went up, it's hit 88.86 there, come back below it, went back above it, come back below it. So depending upon where it expires, will sort of determine, of course, the ultimate outcome on that trade. All right. So again, just to keep it simple, pound dollar is our major pick of the day, and that is buying the 63.75 for about $85, and we sold the 63 at 95. Again, 2 o'clock expiration for somewhere around $15. Okay, and giving us a $30 profit on that butterfly. And I've walked through those before. We got videos on those, so if you have any questions, of course, just let me know, and I'll be glad to help answer any questions that you may have. Let's see. Okay, so that knocks out the questions on that piece. The next thing we want to look at is what are we going to do going into it? Okay, we know we got our ranges here for our butterfly trades, but what is our strategy for strangles or straddles? And also, is there any deviations or anything like that we might want to be aware of? Okay? So, first thing I want to do is we'll go up and we'll look at that pound dollar trade. And just to show you what I was talking about a little bit earlier there, let me grab a different chart. Give me 1 second on that. There we go. Okay, so right over here, and we'll throw on the pound. And this is using Ninja, which is a great platform. And a lot of versatility in it. The reason we were able to get these so wide is because, again, look, it already moved. Pound dollar moved 2 deviations today already. So there's a lot of implied volatility in that, and that's why it pushed those things a little bit wider. We went in and we sold up here at 36.95, so I can plot that level. So we sold right up here, and we bought at 36.75, so right here. Okay? So to zoom in on that for you a little bit, let's bring all this down. There you go. So, if we look at the 2 o'clocks and focus the chart. There we go. That'll make it a lot easier. So basically, this is the range we're trying to stay in between for the next 20 minutes. If we are, awesome trade. Okay? Pound dollar, major pick. That's the one I'm going with as well. Okay. So now that we have that, let's go in and let me get the stats on the post news. So we do expect some big moves. At the same time, a lot of times that volatility will be built in. But let's look at what do we expect to happen after. Okay, and the expectations more being based upon how has the market on average moved in reaction to the FOMC news announcements. Well, the euro dollar on average, 95% of the time moves at least 50 pips. Not too shabby. With an average range of 70. Okay, pound dollar, 83% of the time moving 50 pips, pretty much a 70 pip average range. The Aussie dollar, 75% of the time moving 50 pips with an average 58 pip range. Those are really your top 3 pairs for either straddling or strangling a trade over on Nadex. That would be the top 3 picks. So let's see, based on those stats, okay, what's available that might have a good potential risk-reward. Now, if I'm going to do a straddle, okay, then I need to go over to the spread scanner. All right, so we're on the spread scanner. And anytime I'm doing a straddle, first we'll just select the ones we're interested in. So we're interested in pound, euro, and Aussie. And then I'll say, you know what, I want a 1-to-1 risk-reward on a straddle. I want a $100 max risk there. Then we're going to go in, we're going to look at these 3 pairs and see what we can pull up. And so in some of these, I mean, we've had some pretty big moves already today, but we also need to go in and choose both directions. So again, if you're starting fresh there, demo, reset, enter 100, and then enter 1 on your risk-reward ratio. Okay, pretty simple, not hard to do at all. Don't worry about proximity or break-even distance or any of that fun stuff. All right, so now we got the Aussie dollar. Now, 2 o'clock isn't going to do us any good. We expect this move to happen after, right? After the FOMC comes out. So we're going to get rid of these 2 o'clocks. So we're going to say we want at least, at this point, we'll just say 30 minutes to expiration. That'll knock the 2 o'clocks off there so that we're not even seeing them. So I don't want to see anything that isn't, a potential trade for me. And then now we got to find out what are going to be our best potential trades based on where the market's at right now. Well, there's an 89.10. That's an 88.80. So that one is a little further in the money. And one of the cool tricks, you can click on a ticket and you can see the underlying. So right now the underlying is like right at 88.94 right now. So ideally it would drop back a little bit. And then we could maybe focus over here on the 88.80s. Right there. And if I did that, then I need to find one that's going to go on the other side. There's an 88.80 as well. So that'd be looking at Aussie dollar. Now, here's the issue. The cost on this trade is about $55, okay? What's our expected range? $58. That's what we expect it to move high to low. So there's really not any room for profit. There's so much implied volatility already built in that there's not just really any kind of big edge on this trade. So at this point, even if it got back to our strike, probably going to pass on that straddle. We'll go on down to the pound. Let's see if there's anything on the pound that might line up for us. Okay, well, the pound has a little bit higher movement. We expect about 70 pips. Again, we're finding that they're really pricing in this IV. They're expecting this move, this 70-pip move. So look at that right there, right on the money, and we're talking a 76-pip, okay? And it's basically trading at, 60, let's see, the pound dollar at this moment is at 63.86, so we're like 4 pips off of the floor and the ceiling of those 2 spreads. So with that, I mean, you're talking about, I mean, they're literally pricing in the exact expected move. Okay? Now, there is another way to do this. I'm going to talk to you about it in a second. Remember, I said we're going to talk about a couple new ways to do these trades. So for fun, in demo, we're going to do them out and just watch and see what happens. Okay? You'll have to watch afterwards because the show stops at 2. But you can follow along in the demo to check it out. But again, that trade has no benefit to us because we don't expect it to move more than 70 pips. So look at it this way. This thing's about 35 pips above where the market is. So, or 40 pips really, right? So if it moved 40 pips, it would have to move another 40 on top of that to cover the risk of the short side. So we're talking pretty much an 80 pip move before we're at break even. And we don't expect it to even move 80 pips. So knowing these stats helps you not just blindly go in and throw straddles and strangles and stuff on everything and wonder why you keep losing. So you need to know the expected move, and therefore what should your risk be, okay? Risk is way too high. Going over here to euro dollar. Now in the euro dollar, we can see what do we got. Well, I bet we're going to find a pretty similar scenario. They're being pretty aggressive about their pricing today. And they, I mean, market makers. So Nadex is an exchange. They're not making the markets. They're just making the facilitation process. They're just like CME is connecting you to market makers and other traders and all that. So right here we got 60 pips. So they actually got a little bit lower expected move built in to the euro dollar. But overall, you know, really, I mean, there's like a room of like 10 ticks to make any money. So what do we do with this? Euro dollar is pretty useless. Pound dollar, way overpriced. Aussie dollar is pretty much right on the money. Really not useful at all. So how can we make money? Well, what if we did the opposite? As funny as that sounds, okay? What if we did the opposite trade? What if we went on the pound dollar here? Think of this more like a sort of an iron condor almost. And so I'm going to open these tickets up. I'll show you what I mean by the opposite. And let's make sure. Yep, there we go. But this is a cool one to follow along. All right, so we're going to open this ticket up. And then we're going to open this ticket up over here. Oh, probably in the same place. There we go. So let me do that one more time for you. So we'll open up this ticket on this side. We're going to open up this ticket on this side. But now we're going to sell and buy. Okay? So think of this sort of like the butterfly strategy. To not lose on the trade, okay, then I need to account for basically this fact. I'm going to make, if I sell this at 34.22, I don't want it to expire higher than 39 pips above, or vice versa. So we'll come back, we'll wrap this one up, put this in, and then we'll compare and see if maybe there's something on the strangles so that we can do. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so we got that summary of positions right there, and let me go over and see what else we have going on. Going in there. So let's see. All right, so one of the things that I talked about that's a little bit different, you haven't seen me go over this one before, but it's literally when it's too expensive, do the opposite, okay? So if you go in and the spread's too much, you know, if it's overpriced, it looks overpriced, then this is sort of similar to doing a butterfly, but it's not as, I want to say in one sense it's not as risky. The reason I would dare to say that is simply because, how do I put this? It's not an all or nothing. Okay, so it's not like you're going to lose all of it guaranteed. You know, now if the thing does fly, then there is a little more risk on this one because it's a wider spread. But you can get out of the trade. And but we have about $40 of potential profit on each side, which means we're going to get a $40 hedge on the other side. And it'd have to move 80 pips, either up or down. The pound dollar's going to have to move 80 pips up or down before we, as of 3 o'clock, okay, before we lose. So if it moves up, you know, 80 pips, we're basically still good. If we want to have a 1-to-1 on this thing, we can actually allow a 160 pip move. Okay, because we bring in $80 on the trade, you know, approximately. You could do it like if you did it right now. So if you went in and I'll throw another one on there, another set on there. So if I went in and I do this trade, I do 10 contracts, then but I do the inverse. Okay, so right there, I can make 360 on 10 of those. If I go in and I sell these, I'm going to flip that to buy. Okay. and I can make 380. So you're talking about $800. So I'd have to lose $800, okay, for it to be 1-to-1, reward to loss, which means that since it can move up 80 pips for me to be break even, because 40 pips means that the first one, is right there, then I have another 40 pips of profit protection. I got a 160 pip range. So, anyways, that's a fun one. It's an iron condor, and there is some pretty cool ways to do them when there's a lot of implied volatility built in the market, and meaning that you have a big break-even distance being right at the money and only like a couple hours to go. So this is the new big strategy of the day that I wanted to show you an example of. And let's see here. The one other thing we're going to do, try to wrap up because we only got a few minutes left before the show is over, okay, is I wanted to go in and I wanted to show you. Let's see. Let me open that up. I have somebody asking if I can go over that one more time. I wanted to see if there was any possibility of maybe some cheaper, and often there is, cheaper strangles, okay? So right here, we'll flip that to buy for you. So that's the 2 tickets, just so you got those. Okay? So some cheaper strangles right there. That because often you'll find that the binaries can be cheaper. Now they're usually more of an all or nothing. So you want to be aware of that. Okay? That whole all or nothing phenomenon. But let's go in and let's look at them real quick and see what we got that might help us out. Okay? So right here, scrolling on down, and sort of seeing, is there anything that may fit within our parameters? And we got minutes to go, okay? And if we're going to do a strangle, we need to do one other piece. We need to flip this 5 to 35 and out of the money, okay? And we can extend that out right there. We need to make sure that we're looking at the 3 o'clocks. Don't buy the ones that expire in a minute and 45 seconds. Anyways, go over here and see if you can find some good ones. And that's just all we're going to have time for today. Check out the other shows on the strangles. But that's going to have to wrap it up. You know the stats. 70 pips on euro dollar, 71 pips on pound dollar. Can you put on a strangle for basically $35 or less? If you can, with a 70 pip up or down move, you got your trade. All right. Y'all have a great day.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.